I want to tell you a story about these two brothers who were born rich, like oil money rich. So, these two overconfident oil tycoons hatch up a brilliant plan to make even more money. And their master plan was to bet everything on silver. Now, they didn't want to buy a few silver coins like a normal investor or a normal person. They're filthy rich, right? So, they end up owning a third of the world's silver supply. They were so confident that the price of silver was going to go up tenfold that they literally chartered Boeing 707s, like multiple Boeings, just to airlift their silver to their Swiss vaults. That wasn't enough. They were borrowing even more money to buy more silver, and the banks were just throwing cash at them. They thought that they cracked the code to unlocking an ungodly amount of wealth. They thought that they were going to be the richest humans in history. But as you can imagine, things didn't exactly go their way. Instead of becoming silver kings, they became the poster boys for one of the most spectacular financial disasters in American history. We're talking about losing billions of dollars in a single day. We're also talking about personal bankruptcy, the US government having to step in to intervene. I mean, at this point, you'd think that these two brothers in our story would be financially broken, poor. But somehow today, they're still worth over $20 billion. This is the wild story of the Hunt brothers who wanted to get rich off of silver. The concept was simple enough. Buy enough silver and trigger a short squeeze that would make the backers of this plan rich beyond imagination. Instead, it became a financial disaster known as Silver Thursday. It gave way to panic and chaos on Wall Street, leading to a whole host of legal problems. The masterminds behind it were the Hunt brothers, Nelson Bunker and William Herbert. Now, they believed that silver was undervalued and a potential hedge against inflation. So, they bought it. They bought a lot of it. The plan was to corner the entire silver market. By early 1980, the Hunt brothers controlled over 100 million ounces of silver. That's nearly 1/3 of the entire global supply. Prices soared by a staggering 700%. At this time, this value was equal to the entire GDP of Sri Lanka. I mean, owning that much silver wasn't without logistical problems. They had to charter 3 Boeing 707s just to airlift the silver to a secure vault in Switzerland. Meanwhile, supplies were running low. Jewelry prices soared. Burglaries increased across the country as thieves targeted anything made of silver. I mean, people tore through their homes looking for old cutlery, coins, and heirlooms, anything that they could cash in on. I mean, the silver mania had come to plague the entire country. And the brothers could not have been more elated. They were on the verge of making the single biggest profitable trade imaginable in history. But then, almost overnight, it all unraveled. On Thursday, March 27, 1980, the commodities market took a brutal turn. Silver prices collapsed. The Hunt brothers failed to meet a margin call, a critical demand to put up more cash for their leveraged silver positions. I mean, this was the tipping point. Silver prices plunged more than 50% in a single day, dropping to below $11 an ounce. Wall Street was shaken. Brokers and banks were scrambling to contain the damage. I mean, the Hunt brothers' silver empire had collapsed under its own weight. The gamble was one of the biggest lessons in market failures of the 20th century. So we need to understand how this all happened. The beginning of what would become the silver bubble starts all the way back in the 70s. You see, in 1971, President Nixon pulled the US dollar off the gold standard. He promised that this move would restore confidence in the economy. He wanted Americans to say that our best days will lie ahead. What instead followed was oil shocks, recession fears, and economic uncertainty. Investors were looking for something solid, something that would hold its value when cash didn't. Most turned to gold, but the two brothers from Texas saw a different opportunity. You see, Nelson and William Hunt had been heirs to one of the largest oil fortunes in American history. Their father was H.L. Hunt, who had built a massive business empire during the oil boom. He died in 1974, leaving behind billions of dollars to his sons. I mean, only elite royalty and brutal dictators had more wealth than him. I mean, the Hunts had deep pockets, but their greed ran even deeper. They wanted to amass the biggest fortune the world had ever seen. And they had this theory that silver would become the next safe haven. In particular, Nelson Hunt believed that inflation would destroy the dollar's value over time. In his eyes, silver was the ultimate hedge against economic collapse. It was the real wealth in a world of collapsing currencies. So he convinced his brother and they both made a plan. With oil money behind them and a deep distrust of the financial system, the Hunt brothers began a campaign that would shake the global markets and nearly rewrite the rules of modern finance. At the time, silver was trading at only $2 an ounce, but Nelson believed that it could rise tenfold due to a combination of a decline in the real value of US dollar and markets becoming even more volatile and unpredictable. So he and his brother started buying. Not just coins and bars, but also future contracts. Basically, these were agreements where they could buy silver at a fixed price in the future. Now, unlike most commodities traders or investors, they didn't settle in cash. They demanded actual delivery of the metal. Now, this was very irregular. It was highly unusual. Most investors never saw the metal that they invested in, but the Hunts wanted the real deal, and they wanted tons of it. As their stockpiles of silver grew, so did the demand. Prices soared. The Hunts just kept buying and buying. When their cash ran low, they borrowed more money. Their name had carried weight in finance and lenders trusted them. They secured loans at rates that other traders could only dream of. And with each new contract, they pushed prices even higher. Silver surged by several 100%. The market bent under the pressure. The brothers had built one of the largest silver positions that the world had ever seen. The entire market was watching their moves. The brothers didn't fail to take advantage of this attention. They actually began sharing their strategy with others. They preached to the elites and ordinary investors alike that silver was the only safe place in an economy spiraling towards inflation. And many listened to them, including those in the Middle East. Some of the biggest backers came from Saudi Arabia. They pooled their money with the Hunts and helped fund even more silver purchases, both physical metal and future contracts. The international capital kept flowing in, and the Hunts gained even greater buying power. And in doing so, they risked upsetting the global financial system to its core. Now, of course, this didn't go unnoticed. The US government had tolerated the Hunts' activities for a while. But when foreign investors started playing a key role, that's when regulators started to grow concerned. Silver wasn't just a commodity. It was a strategic resource useful in electronics, pharmaceuticals, and even defense. The idea that foreign-backed billionaires could gain control of over a third of the world's supply crossed a red line. Key figures in the government had already begun pulling strings. Behind the scenes, the groundwork was being laid for the Hunt brothers' dramatic fall. Now, meanwhile, the brothers were still blindly pressing forward. By the start of the new decade, the Hunt brothers had tightened their grip on the silver market. Their continued buying reduced the available supply and drove prices to a new historic high with every purchase. In the world of commodities, every buyer has a seller. The Hunts were long, and the short sellers were now in serious trouble. They had bet against rising prices and were quickly being overwhelmed. A full-blown short squeeze took shape. As the Hunts took physical delivery of silver and cleared out inventories, short sellers scrambled to cover their losses. The pressure created a feedback loop that kept driving prices even higher. At its peak, the Hunts' position was worth an estimated $4.5 billion. But then, on January 7, 1980, the market pushed back. The Commodity Exchange, or COMEX, stepped in, and they introduced a new rule, Silver Rule Number 7. This rule put strict limits on buying silver contracts with borrowed money. Traders could still sell, but new long positions were heavily restricted. It also prohibited using borrowed money from brokerages for speculative leverage. As a direct result of this intervention, prices had started to fall. Margin calls were rolling in, and every drop in silver's value meant a decrease in the Hunt brothers' cash reserves. You see, they suffered millions in losses each day just to keep their positions intact. And then the Federal Reserve entered the picture. Behind the scenes, the Fed had sent a clear message to major banks: stop lending money to speculative activity. The directive didn't name the Hunts, but the timing made the target pretty obvious. With pressure from the top, the banks pulled back. Now, the brothers' access to credit had evaporated. For years, their name had opened doors. Now, that same name seemed to have become a liability. They were still on the hook for billions of dollars in contracts. They had warehouses full of silver. But without liquidity, they couldn't defend their position. The timing could not have been worse. As the market turned against them, the one thing that they needed, cash, was suddenly out of reach. And with no ability to borrow and no buyers left in the market, the silver price began to unravel. The Hunts could no longer defend their massive position. What once had been billions of dollars in silver assets quickly turned into over $1 billion in debt. the fallout spread fast. The Hunt brothers' collapse didn't just hurt their wealth or their net worth, it shook the entire financial system to its core. Those banks, brokerages, and investment firms that backed the Hunt brothers were now exposed. Margin calls triggered panic, losses piled up across Wall Street, and several firms faced bankruptcy. Some were forced into emergency mergers just to survive. Investigations followed, public statements were made, and quiet pressure became direct action. The Hunt brothers were hit hard, financially, legally, and politically. They had bet everything on silver, but now they were broke, isolated, and blamed for one of the worst commodity crashes in US history. But the worst was still ahead. While they were struggling to recover, their fortune took another major blow. Oil prices collapsed, cutting deep into their core wealth. By 1986, their company had to file for bankruptcy, and 2 years later, they filed for personal bankruptcy as well. But that wasn't even rock bottom yet. Their situation was about to get a whole lot worse. In 1988, a New York jury ordered them to pay over $130 million in damages to a Peruvian state-owned mineral company. The defendant claimed that the silver crash had been their fault, and now they were to pay up for the damages caused to the company's finances. And then came the final blow. The Commodities Future Trading Commission hit both brothers with $10 million in fines. On top of that, they were permanently banned from trading in US commodity markets. Once amongst the richest men in the world, the Hunts had lost their empire, their influence, and now their financial future was at risk. But in the end, their names still carried a lot of weight. Creditors were sure that the brothers could rebound. To rescue them, a group of major banks and corporations had stepped in. Together, they arranged a $1.1 billion credit line to bail out the Hunt brothers. It was a lifeline that stopped their empire from total implosion. But recovery wasn't easy. It took nearly a decade to unwind their silver holdings and settle their debts. They were billions of dollars poorer by the end, and their credibility in financial circles was shattered. But they never truly lost their fortune. Despite the crash, the fines, the bankruptcy, the Hunts still stayed within elite circles. You see, their roots in oil remained strong. As oil prices surged again, the family also expanded into real estate. Slowly, the dynasty rebuilt. While the silver episode became one of the greatest cautionary tales in financial history, the family legacy outlasted it. Today, the Hunt family is once again amongst the richest families in America, estimated at $20 billion of net worth. The rise and fall of the Hunt brothers is more than just an interesting story for a YouTube video. It's a hard financial lesson in the dangers of unchecked speculation. The silver saga proves that even the deepest pockets can't control a market forever. No matter how well funded, price manipulation has limits. Markets can turn, rules can change, and when governments and regulators decide to step in, the game itself can be rewritten overnight. Silver Thursday also highlights something every investor should remember, that diversification matters. The Hunts placed nearly everything into one commodity, and they borrowed heavily, and when silver collapsed, there was nothing to cushion the fall. Risk management is not optional. It's a lifeline saving you from massive losses, especially when global markets are highly volatile. Speaking of which, many have tried to emulate the Hunt brothers' strategy. Whenever markets grow uncertain, it has led some investors to cash in massively on silver. However, today the situation is vastly different from what it was in 1980. Digital trading platform, enhanced regulatory oversight, and stricter position limits make it nearly impossible for any single entity to amass market-moving positions like the Hunt brothers' strategy. Despite these safeguards, there has still been no shortage of speculators looking to repeat history. 2021 was the year of the GameStop short squeeze. Around that time, retailers had turned their attention to silver markets. These wild claims were made that prices could potentially reach $100 to $1,000 per ounce by coordinated buying. However, retail investors could not even sustain it past $30 per ounce before the movement crashed. But now there might be another attempt made on silver markets as we speak. This time a more coordinated and well planned out campaign by retailers. Some have dubbed it the Silver Squeeze 2.0. But whether it's a true short squeeze or just wild claims is still up in the air. We just don't know. So far, prices have remained stable as the buying power of ordinary investors is vastly outmatched by those of institutions and industries. Unless some eccentric billionaire with a famous name gets involved, it's unlikely that it would even trigger a mania like that of the Hunt brothers. But who knows these days? The Hunt brothers thought that they had found their fortune in silver. Instead, they sparked one of the most dramatic crashes in commodity history. While they recovered some of their wealth, their story should still be a very cautionary tale for future traders. I'm curious to know, what are your thoughts on the whole saga? Was it right for the government to intervene at this point?